I want to welcome everyone to the Bitcoin 101 workshop for August. It is almost September. We've had two tech workshops this month, which is awesome. So kicking it off right before the school year is Gary Kraus. And Gary, do a little intro about yourself, how you started in tech, what branch you served in, and what we're going to expect for today.
Sure. First and foremost, let me give a legal disclaimer. This is not financial advice. Do your own research. I make no assertions. We're going to be going over kind of like the what of everything. But with that out of the way, I'm Gary Kraus. I served in the U.S. Navy for 11 years, 4 months and 3 days. Not that I was counting. I'm a Navy chief. I was a cryptologic linguist. I worked in a couple of different cool high-speed programs, and I had a great time. But after my first daughter was born, or rather when my wife was pregnant with my first daughter, perspectives and priorities shifted and changed. And I went all in on software development. So about 2 years out from my EOS, or end of my contract for those non-military folks, I started grinding on software, and podcasts and Operation Code was like a huge part of my education, huge part of my network. And yeah, just kind of worked to learn it, and I did it, right? Like writing code. In my opinion, the best thing you do if you want to become a software developer is like go write code, whether it's good code, bad code, as long as it works, right? And then you're doing something right, you're advancing, you're moving forward. So I did that for 2 years. I got out at the end of 2019, and I landed a pretty sweet gig at Microsoft doing site reliability engineering for Office, Exchange, and such. Worked on that for about a little over a year, moved over to an Azure machine learning infrastructure team. Again, it's kind of like my official title was site reliability engineer, but there's a lot more coding involved. And then lately, I have been working at Fundrise, which is a late stage startup based out of the DC area that does like investing in financial tech, specifically in the real estate market, and dabbling in some other ones. So that's kind of my background. I'm not here on behalf of anybody other than myself, and just volunteering as an Operation Code member and contributor. Not as much as I used to, unfortunately, but I still like to lurk in the chat and chime in where relevant.
By the way, I remember your 5 a.m. coding expeditions.
Yes.
I don't know if you still do that, but Gary was working with my youngest son, and he was learning, I think, Python at the time. And he was like 14 years old, getting up at 5 a.m. to code with Gary, which I thought was pretty cool.
Yeah, that was.
I still remind him of those days. I'm like, remember when you used to just have so much motivation? Got up super early to code.
Yeah, it was that's how I did it. Was I would get up at 5 and I would code until about 7, and then my family, my youngest, we only had one kid at the time, so she would wake up and I'd get ready for work and I'd be out the door and kind of do that all over again. I kind of stopped doing fun things, and just kind of focused on making that transition from military to software, and the really the making it a priority is what it was. And yeah, that 5 a.m. came too soon sometimes, but it was definitely worth it in the long run.
Awesome. Well, take it away and I'll just field the questions after.
Sure. So I do run Shenandoah Bitcoin Club. So I've given a presentation very similar to this before. Given the audience and given Operation Code, we might go into a little more technicals than what I usually do. But I do like to keep my presentations sort of informal. So I have slides laid out. And I also have multiple monitors, so I won't be looking at the camera necessarily. Yeah, so if you have questions, post in the chat. If I see it, or if I'm broken up for my flow, I can address it. But otherwise, there's definitely time at the end of this that I'm ready to answer your questions. One thing I will say is I hope that this can be a starting out point for a lot of you in your Bitcoin journey, because one thing that I found consistently is, people say it takes like 100 hours of study to really understand what Bitcoin is and like sort of begin to understand the implications of what it is. And I do believe that it's a number of things to a number of different people. But first and foremost, it's a technological protocol, right? Like it is internet native monetary network. But yeah, without further ado, let's kick it off into a Bitcoin 101. So the first question is like, who created it, right? And the name, or the pseudonym, meaning like anonymous, like identifier for the person or group of peoples that created Bitcoin or discovered Bitcoin rather, because it's not really anything new. It's kind of an amalgamation of technology that existed prior to Bitcoin that was combined to make something to make what Bitcoin is. So Satoshi Nakamoto is the name of the individual that first emailed this cypherpunk cryptography emailing list. It's kind of like the old school forum type of things where you subscribe to this email list with your email if you're interested in a certain topic. Well, this one happened to be cryptography. And in about 2008 timeframe, Satoshi Nakamoto emailed this white paper, this 9-page white paper, which you can still go look up and read. It's very short for as complex as the system is, but it's also relatively simple, right? And even the layperson can kind of read it and probably understand the majority of it. But yeah, Satoshi Nakamoto is the person that, or people that created Bitcoin. And to this day, like he, she, they are anonymous still. Like nobody's definitively identified themselves as Satoshi Nakamoto. There are several claims out there of people that say they are. But one of the, I guess, hard proofs that I would like to see is like there are lots of coins sitting in Satoshi's wallet. And if those ever, if you have the ability to move those are kind of definitive proof that you are Satoshi, and those have not moved for quite some time. So the picture on the left is, I don't remember where it is because it's been too long since I added this, but this is kind of like a bust of Satoshi, right? Like an anonymous bust in a country somewhere. And on the right is the and it was like the hex dump of basically this article on a website, right? Chancellor on brink of second bailouts for banks. So, there's a lot of meaning that you can derive from that. I derive from it that basically Satoshi Nakamoto was upset with the banking bailouts and kind of the banking system, and developed this internet native monetary network called Bitcoin as sort of a reaction to it, or a solution to something that they found it was a problem. Something that's very interesting though is Satoshi's disappeared, right? So again, like I said, those coins that haven't moved in like years and years, that's because the person or peoples that is Satoshi, like dropped off of comms and like has not been heard from again in quite some time. So this is, April of 2022 was the 11-year mark of like the last time. And there are people out there kind of like that have gone through the writings and such of Satoshi Nakamoto on the different forums and email chains to kind of like try to suss it out. But again, there's not been any definitive proof that I've come across. Another question, along the who line, right? So we talked about who discovered it, but like who's using Bitcoin? And this is a pretty interesting one. And there's a lot on this slide, so I'm not going to talk about all of these. And these articles are a little bit dated now. There's many more articles on top of this, but there's a common saying in the Bitcoin community: Bitcoin is for enemies. And that's like those first two links I have up there, right? So like Ukraine used Bitcoin to raise funds to fund their war effort, and Russia is using, like use Bitcoin to evade sanctions. That's because Bitcoin's a neutral protocol, right? Like it doesn't care. It's like the internet, right? You can use it for good, you can use it for bad. Like it's just a tool. It is a protocol. It doesn't care about who you are, what you are. It just cares that you have electricity, software, and access to the internet. You can see that some of these countries, there are two countries that have adopted Bitcoin as a legal tender: Central African Republic and El Salvador. There are stories out there of there's a woman in Afghanistan who started a software company, and paid all of her employees in Bitcoin, or at least offered it, right? She would exchange for the local currency if they so desired. But those Afghan women, it was all women too. So it was an all women company, and it was a Bitcoin focused company. And basically once the Taliban took back over Afghanistan, for those of you that don't know, like Taliban don't allow women to have properties. So no banking, no money or anything like that, right? Like it's all very tightly controlled by the men over there, due to just societal reasons. Well, there are women that had Bitcoin, their wealth in their head, because you can memorize what's called a seed phrase, which allows you to recover your funds in a, an emergency situation. And we're able to get out of Taliban-controlled Afghanistan with their money intact, right? So all kinds of different stories, anywhere from, ExxonMobil is using flare gas on mining fields to mine Bitcoin out in the middle of nowhere. Of course, one of the first use cases was like, there's this huge thing called Silk Road, which is a big black market, right? Drug dealers and what have you, whatever goes on a black market. And that's because of some of the properties of Bitcoin that we'll go into later. But now you have like Fidelity that is offering Bitcoin in 401k accounts. You also, one of the more recent big news is the BlackRock, which if you're not familiar with BlackRock, like they are the like investment company out there. They are offering Bitcoin to their institutional investors through a partnership with Coinbase. So like there's not just like nobody using Bitcoin now. There are celebrities even, right? So Aaron Rodgers, like I think Tom Brady had something with some Bitcoin thing. You'll see some NBA players like taking part of their paychecks in Bitcoin, et cetera, et cetera. So lots of different people have come to it from different walks of life. Lots of different institutions have come to it. Goldman Sachs is offering Bitcoin-backed loans. So, lots of financial people or institutional financial people are getting involved with Bitcoin. And the adoption, if you've ever heard of like the network effect, right? It's something that like makes Facebook and Instagram and all these very, very valuable, is because it's only valuable because other people use it, right? Bitcoin has a similar property there where the more people that use it, the more people that adopt the use of it or understand it, the more valuable it becomes, right? Because now I can trade with my neighbor who recently started to adopting Bitcoin because maybe we want to trade firewood back and forth, or maybe just, whatever. So as the adoption grows, the value of it grows. And as you can see from this very short list, this list could probably be expanded, 5 times, giving examples of who is using Bitcoin. The next thing we'll go into is kind of like a high level of what is Bitcoin. And this slide is we're going to go over some key terminology in the Bitcoin community, right? And hopefully this will help you at least understand writings or what have you if you come across it. But a Bitcoin, right, is just a unit of measurement. And it is a unit of measurement that is 1 out of 21 million units. If we want to get super technical, it's actually not 21 million exactly, but like, let's not dive into that just for purposes of like generalities. It's 21 million, right? And this can all be boiled down to code, right? There is a GitHub repository out there that the Bitcoin code is like all across the planet on several different like thousands and thousands of computers. And so you can go actually look at the definition of a Bitcoin in there, and it is 1 unit of measurement that is 21 million of a total pie, right? So you have this pie of 100%, it's 21 million Bitcoin. Now, Satoshi is another unit of measurement in the Bitcoin ecosystem, and it is 1/100 millionth of a Bitcoin, right? So 100 million Satoshis go into 1 Bitcoin. And this is where like you don't have to buy or trade or exchange 1 whole Bitcoin, right? Like at this point, the value of a whole Bitcoin, is like the price of a car at this point. It's right around the $20,000 US dollar mark when denominated in dollars. So I can't go out tomorrow and buy a whole Bitcoin necessarily. And a lot of people in America or even across the world can't do that. But what you can do is you can transact, you can buy or exchange, rather, you can exchange your currency for sats or Satoshis, right? And it's an homage to the, discoverer or inventor of Bitcoin to refer to them as such. And, this allows you to get down to microtransactions, right? Because you're not going to use a whole Bitcoin for buying coffee, but you might use, a few thousand sats to buy coffee. So one of the key things to understand is, you don't necessarily have to transact in a whole Bitcoin. It is highly divisible. And this number can change, right? Again, the code base, it is a code base, and it is very slow to change. It is very hard to change, but it can change if there were ever a need to. But currently at this point, you take 21 million times 100 million. I don't know what that number is. I'm not good at math, but if you plug that in, like that's a lot of Satoshis out there across the whole, ecosystem. One thing to note is all Bitcoins are not in circulation right now. And we'll kind of get into that with this next one. So a Bitcoin miner is just a really like a network server or network device that uses hash power or computational power to timestamp these transactions, right? So all these transactions are happening on the Bitcoin network, and the way they get into the blockchain, the way they get it finalized and settled, is a miner timestamps them into a block, right? And there are fees associated with this. And then there's something called the block reward, which is currently it's like 6.25 Bitcoin. So every miner that mines a new block is rewarded with 6.25 Bitcoin, right? So that's a pretty significant sum of money in the grand scheme of things. And there's a schedule to this too. So it's not just the 6.2 Bitcoin that you get rewarded, it's all the transaction fees from all the transactions, right? So you have all these transactions that are happening. And once a block is timestamped and codified into the blockchain, now that is the new input, right? The whole chain is now the new input into that next hash, and all these new transactions go into the next one. So if you think about it, you have a block that's mined, all the new transactions go on top of it into another block. Once that one's finalized, right, and it keeps stacking on each other. That's why it's called like a chain, because everything in the past, starting with the block 0, right? Because we're programmers, so we start with 0. Everything starting with block 0, the Genesis block, is part of the hashing input into the next block, right? And there's a whole bunch of other things that go into that, but we're not going into those technicals today, so we'll keep it at a high level there. The next kind of terminology is a node. These are different than miners, right? So there's, that can be sometimes confusing, especially for the non-technical people. I think Operation Code community kind of understands the difference between like different servers or node, right? Like those terminologies are common in the programming world. But a node is just a computer that downloads the whole blockchain or part of the blockchain. You can do what's called a prune node, meaning you have, X amount of blockchain. And it basically, you're broadcasting transaction to yourself. You're also validating the blockchain. So the first time you download that blockchain on your node will go through and validate it. Now, the nice thing about this is every transaction, once it's in a block, it is very, very easy or computationally easy to validate that or verify that transaction, right? And all the math and cryptography that goes into it. It's very, very easy. Like Raspberry Pis do this. Raspberry Pis, for anybody who doesn't know, is like a little microcomputer about yay big that is not super powerful. And so the fact that these devices can do it means like, your 10-year-old laptop, if you really wanted to, you could download the Bitcoin blockchain on there and you could process the whole blockchain. It might take a little bit longer than a modern day computer, but you can do it. And what this means is people in third world countries or even second world countries, or somebody that doesn't have access to like top of the line hardware, can still gain access to the Bitcoin ecosystem by running a node, right? You have electricity, you have software, the Bitcoin node software, and you have internet, you can transact and interact with the Bitcoin network. And you can see this if you look at a global perspective of the network. Nodes are just everywhere, all across the world, because the barrier to entry is so low to do that. Running a node, I like to kind of compare it to like, I'm basically like my own bank, right? Like my Bitcoin come in and I can verify the transaction. I can verify that person sending me the money or the Bitcoin, it like has what they have because I have a whole copy of the blockchain. I can go look up their ledger entries or their blockchain entries of all the previous transactions they've had and say, like, okay, yeah, he sent me 2 Bitcoin. Like I can see here that, here's where he got those 2 Bitcoins in the past. So it's a ledger, it's a blockchain that is verifiable and it's verified by like thousands of computers across the world. Blockchain, right? I'm going to read this underlined section here verbatim because I think this is kind of an important key thing to understand. It is an open, transparent, correct, immutable ledger, right? So a ledger like a checkbook, money coming in, money going out. So all these transactions in and out. The open part, meaning, anybody can download it. It's actually encouraged. Like the more nodes there are, the more verified the network is, right? Transparent, meaning like starting from block 0, starting from that very first block, every transaction that has occurred on the network is in there and you can trace it back to its origin. Miners, when they get that Bitcoin reward for mining the block or for time stamping that next block, there's actually, it's like a null address or like a non-existent address sends 6.25 Bitcoin to a miner. Another interesting fact about the mining thing is right now it's 6.25. but sometime in 2024, and it's every X number of blocks, I think it's 210,000 blocks, the mining reward actually cuts in half. So it's going to go down to like 3.125. And then 210,000 blocks after that, or roughly 4 years, it's going to go down, whatever that is divided in half. So 1 point something, right? And every 4 years or every 210,000 blocks, it goes down. And the reason I refer to, these blocks as like timestamps is because a block on average is 10 minutes, right? It could be longer, it can be shorter, but on average, every 10 minutes, tick tock, next block, Bitcoin has, timestamped the transactions that have happened since the previous block. A lot of this is just my opinion, and some people might have strong opinions otherwise, but a lot of companies have sprung up around blockchain as like a buzzword, like technology. But when you kind of boil it down to the technicals, a blockchain is a very, very slow and very, very expensive database. And most database technologies are going to be better suited for like your use case. There may be some edge cases out there that I'm unaware of. Please send them to me. I would love to know them. Yeah, that's the blockchain. Let me get to, all right, the last, well, I don't think this is the last thing. Yeah, yes, it is. All right, the last thing is the wallet and keys. So this whole ecosystem is built around cryptography, right? That's the whole like cryptocurrency thing, the crypto part of it. And these cryptographic keys, or these asymmetric keys, if you're familiar with asymmetric cryptography, you have public and you have private keys. Your private key on the Bitcoin network is what allows you to unlock and prove that you own transactions by signing messages. Your public key is how you generate addresses or invoices to receive Bitcoin, right? And when you understand the relationship between a private and a public key, it kind of makes sense that you guard your private key with your, with all your life, especially if you're storing a high amount of value in there. And your public key, you're sharing out to people, right? So, hey, Cynthia, I want you to send me some Bitcoin. Here's my address that I've generated for my public key. Most software out there has kind of abstracted all this away. But at the end of the day, ownership and custody of that private key is paramount to your security. There's some, self-responsibility implications there. And obviously you don't want to like store your keys in the cloud because you don't control the cloud or own the cloud, which is why a lot of companies have sprung up around this concept of a signing device or hardware wallet, which is, small little single purpose devices that their sole purpose in life is to store your keys for you. And a lot of them allow for, air gapping them, so you can never plug them into the internet, so your keys never touch the internet. And there's little SD card slots that you stick in there that allow you to, conduct different transaction operations. And then you go take your SD back to your node, right? Because if you're running a full node, you can verify and validate all your transactions yourself. You can have somebody else run a node for you as well. And there are companies out there, or, possibly even individuals out there that might run a node for you. I'm going to pause here. I'm going to look at the chat because I saw some action in there as far as questions. Scroll up.
Jeremy, feel free to come off mute and bring up your question, because I think that one referred to what he just said recently.
Okay. Can you hear me?
Yeah, I can hear you.
Okay. I was just curious about that, the halving. I've heard about the halving a lot, and I wasn't sure if that was specifically referencing, the difficulty when when a block reaches that point and then it gets half, or is that something else?
So, I saw their mining difficulty. That's a separate thing than the halving. So the halving is what I was referring to, where the reward cuts in half every 210,000 blocks, or every roughly 4 years. And that started like in the beginning when Satoshi and like 2 other people were running this network. The mining reward was 50 Bitcoin, right? And so after, like, again, so Satoshi's wallet, like, it is the biggest hacker prize out there. And that's one of the amazing things about this is, anybody out there that's into like the hacking world, bug bounties or, what have you, like the biggest bug bounty out there is Satoshi's wallet. Like if you can hack Bitcoin and figure out how to get the funds in Satoshi's wallet and then dump it all, like you're going to, potentially ruin an entire ecosystem and become infamous, right? Which that's pretty sweet in a hacker world. But 2, like you have access to so much Bitcoin at that point. So yeah, it was 50, and then it cut to 25, and then it cut to 12.5, and now we're at 6.25. And you can see like we'll get into a couple of these properties next, like the properties of Bitcoin and why you might find value in it. But one of it is the scarcity of it, right? So this halvening is essentially the inflation rate of the network, right? So it's the amount of money that is released into the network, and it's on a engineered programmatic schedule, right? Like you don't have to think about what some random board of people are deciding to do this week. You can understand that roughly every 10 minutes, 6.25 Bitcoin are released into the ecosystem to a miner that has successfully timestamped transactions, right? And that's kind of a powerful thing when you think about it from a monetary perspective. Let's see what else we have here. And the mining difficulty. That is a different thing. The mining difficulty adjustment happens every 2016 blocks, I think. I might be wrong on that number, but it's a more rapid adjustment, but it's about every 2 weeks. And what that does is these miners, right? These timestamp servers, they have what's called hash power, right? I don't even know what it's measured in now because it's so large. But like your standard, if you get one miner, like a mining rig or a timestamping server, it's going to be measured probably in like terahashes, like, anywhere from like 12 to 100 and some terahashes. Well, all these miners across the world are all competing for that next block. So you have all this computational power thrown at the Bitcoin network, securing the network by timestamping these transactions. And so what happens if a bunch of network miners come online all at once, right? Well, that's going to speed up the issuance of Bitcoin because they're going to find those blocks a lot faster, because the more hash you have, the higher probability you have of finding the solution to the mining algorithm. And that's all it is. You're throwing random numbers into an equation and just computationally hashing it until you find the right answer. And once you find the right answer, you broadcast that out, right? And because, like I said, nodes, because it's so easy to verify the transactions and the right answer, you broadcast out that you found the block, and everybody on the network says, oh, yep, that's the right answer. And then, it's kind of like a gossip thing. Like it trickles out all the way across the world to every node out there, that you now own that block and you've been rewarded that. So as you increase the hash power of the network, the probability of somebody finding it faster goes up and the issuance increases. Well, the difficulty adjustment is kind of a pretty genius methodology of kind of like a self-healing network to get back to that equilibrium of 10 minutes a block, right, on average. And so if you get a bunch of hash power that comes online all at once, and it drives that hash rate up, the difficulty will go up after that 2016th block, which makes it harder to find that next block, right? And so like it scales with the amount of hash online. Now, if the inverse happened, if a bunch of miners went offline, and you saw this in 2021 when China banned Bitcoin, they banned Bitcoin mining, which, by the way, it's back in China again because we'll get into that too. But a bunch of miners went offline all at once. So that meant that the existing miners had a much easier time or much higher probabilistic chance of finding those blocks. And it was like a really good time to be a miner at that point, until the difficulty adjustment, which once the difficulty adjustment block was hit, the adjustment went way down, right? Or I'm sorry, they didn't have a great time. They had a hard time, and the block time went up, right? Because a bunch of miners left, but the difficulty was still high and the hash power was down here. So it was like the block times were way longer than 10 minutes until we hit that 2016 block, where the difficulty adjustment lowered it back into an equilibrium to get back to that roughly 10-minute mark.
We have 2 questions from Will. Will, do you want to go ahead and ask your first one?
Sure, yeah. Hey, Gary.
Hey.
It has to do with they're kind of the same question. I was wondering about the process and for miners to get the reward. And you kind of touched on it just a minute ago that they're doing this, kind of searching through this random hash computation to see if they get the right answer. I was wondering, is it possible for more than one miner to get the reward for a single block, or is it the first one only?
That's a great question. And I'll try not to go too deep in the technicals here, but there is a possibility for two chains to happen at the same time. And basically, this is the proof of, if you've seen, there's a proof of work consensus mechanism, which just means that the longest chain is the most valid chain, and it is accepted by the network, all the nodes in the network, as the valid chain. So let's say I'm mining here and I find the block, right? At the same time, because again, it takes time for my block to make it to the network, right? So I find a block and I start broadcasting it to the network. I'm in North America, so maybe North America, South America, and parts of Europe receive my message that I've got the block. Well, because networks take time, data takes time to travel, you might have somebody in Vietnam or Southeast Asia somewhere that also finds a block at the same time. That both those blocks are valid, but because of the networking aspect, the internet aspect of it, the nodes on the network might have two separate chains that they are working on as valid, right? And so it creates this kind of race now to the next step. And so what happens is, you might have an instance where there's, two blocks that are competing that have the right answer, and those miners now will not get, well, it might look like they have the reward, but what happens is if one chain gets longer than the other one, then this one becomes now the true chain, right? And so when nodes, right? So if we're in this competition, I find the block, this guy in Vietnam finds the block, and we're hashing out there. Well, somebody that has my block finds the next block first. Now this becomes the longest chain. This is now the most valid blockchain on the network. And there have been times, I think, where it's like there's been two like that. It's a very rare occasion, but essentially you get to a point where it's like one chain is longer, and the network propagates that chain all like across the globe, and then all the nodes dismiss the other chain. And so you, as a miner, it kind of sucks because you miss out on that reward, because you might have found that block, but if you tied with somebody and your chain was the one that didn't get the next block mined on top of it, then you lose out on that reward, right? Because now you're no longer you're part of an invalid chain. Does that make sense?
I think that seems to answer his second one too, because he asked whether more than one miner can get the reward for a single block. So it's really time bound. I don't think that you can get, I mean, it's a digital stamp, so you're not going to have it exactly even like one like nanosecond behind.
Yeah, and Jeremy, I see your questions in the chat here too, but just another answer to your question, William, is it is possible for multiple miners to get a reward of the single block. These are called mining pools, right? So I could plug in my one machine that I have and try to just like find the block, but if I don't have a lot of computational power, like that's going to take me years to do. So what home miners or small operations will do is they will join what's called mining pools, which are basically just servers that people are running that are coordinating the effort and combining all the hash. So it's kind of like you have a central point of the mining pool operator that is kind of delegating the computational hashes to all the members of the pool. And basically your miner at that point is finding like wrong answers. And so you report that back up to the main server, like, oh, hey, 1 is not the answer, guys. So like, don't try that one. Okay, 5 isn't the answer either. Don't try that one. And so you're contributing your hashing power to a group of individuals, a group of entities that are all mining towards the same one. And then the way they divvy that out is that reward comes in, and based on the amount of hash that you provide to the network, you get paid out a relevant an equitable amount of Bitcoin, right? So of that 6.25, if I contributed 1% of the hash rate to that pool, I get 1% of the 6.25 Bitcoin, right? And so I guess there is a way for multiple miners to get it, but from a networking, from like a blockchain perspective, like that one pool is who mined that block, right? And there's lots of major pools out there, but there's also a lot of people that are doing what's called solo mining, which like they just plug it in and they're just like doing it for fun, or maybe they have really cheap electricity, right? I think a few years back, Venezuela had like completely socialized electricity, like you'd have to pay for it. And so like Bitcoin mining went like through the roof in Venezuela because everybody was plugging in all these machines because it was free electricity. So it costs nothing to just mine it. And maybe you get, whatever the Bitcoin reward was at the time, 6 or 12 Bitcoin.
So Gary,
all
I
the
have a
blocks.
question. I don't know if this is um, like two questions actually. One is relevant to the algorithm, like the Bitcoin algorithm. Are they all working towards the same pseudo-random code? Or like to me, if you're just hunting for a pseudo-random code of a certain length that hasn't been used, it could be almost any pseudo-random code. How do they know the specific pseudo-random code that they should be mining towards if they don't know what it is?
Yeah. So again, I don't want to get too technical, but that's the difficulty. So the difficulty of the network is kind of setting the bar for what you have to find. And miners take the entire blockchain as well, or maybe it's not the entire blockchain. I'm sorry, it's the previous block as part of the input into the SHA-256 hash, as well as all the transactions that have happened since the last block. And again, I might be off a little bit on exactly how this works because I need to brush up on my technicals. But essentially, all these inputs are going into that. In how do I best describe this? It's like you're finding a number, and the number has to be lower than the difficulty adjustment, if that makes sense. And lower might not be the right answer. It's actually like at a bit level, like binary level that it's compared. And so it's
Okay, I mean that makes kind of sense. Is that you're looking for some length of a pseudo random code, some polynomial length for that. I mean that makes sense. Here's a broader question. The broader question is why are they looking for these hashes to bound up like the transactions? Like why did they decide that was important for a monetary system, is to have the ledgers of all the past things there?
So this is what's called the double spend problem. So it solves the double spend problem because once a block is mined, right, or time stamped, the transaction is in there cannot be undone, right? So if I send you money, or if I send you Bitcoin and it gets into a block, I now no longer have access to that Bitcoin. I cannot spend that Bitcoin again. In the deeper in the chain, right? So you imagine you have these blocks, right? If your transaction is like 5 blocks down, like there's almost no chance that it's going to chain. We just talked about like there's a race sometimes where there's two chains that kind of have the same length that are competing. Well, if you're like 20 blocks down, like the chances of that happening like are negligible, right? Like it's almost never like an impossibility. I won't say impossible because nothing is impossible, but like the chances of that happening are like so slim. And so what the significance of it is the immutability of or the it can't change, right? And so that means that you can't double spend Bitcoin. If you look at like a traditional banking system, they do something called fractional reserving, where like if I put in $100, the bank might loan out $150, right? Well, you can't do that with Bitcoin if you're using it on the network itself. Now, some of these exchanges, there's like all kinds of like hypotheses out there that they might be doing that because when you have your Bitcoin on an exchange, it's essentially an IOU, right? If you're not holding the keys to your Bitcoin, you cannot, and you're not running your own node, like you have no way of, not that you have no way, you're basically trusting that exchange to operate honestly and faithfully on your behalf. But if you own your own keys and you're running your own node, you have your whole copy of the blockchain, there's like unquestionable doubt, like it's unquestionable that the transactions that led to you owning your Bitcoin are valid, right? Like if
Yeah, I thought that was a good explanation. That you can't do like fractional reserve banking, with Bitcoin. So that shows some of the, the value there. I think.
Yeah, and I think about it too. About there's a movie called Catch Me If You Can, stars Leonardo DiCaprio, and it's based on a true story where basically this guy found a way to defraud using like checks. And so if he was in New York, he would forge checks from like California. And the way the system worked back then is, the check wouldn't clear right away, but he would be able to cash said check, and it would have to wait, from New York all the way to California. And by the time it got back there, like, hey, this check is not like legit, like the guy was already gone and had all his money, right? So that's like a double spend problem, right?
Yep.
And so with Bitcoin, with these hash timestamp transactions, you can't spend money that you've already spent again. And that kind of goes into like one of the attacks on Bitcoin. It's really the only technical attack, and it's the 51% of attack. And so if you owned 51% of the network hash rate, you have an outsized chance of basically controlling the transactions and controlling the tip of that blockchain. But the game theory that goes into that, it would require so much, right? Because it's all a percentage game. So like, if we say we have, and we're just going to use very simple numbers to make this easy, if we have 100 hash on the Bitcoin network, you need to own 51%, 51 hash in order to have, to conduct this attack. Well, if it's 100, you don't just add 51 to get to that 51%, because it's a percentage. I don't know the math of this. Like, you would have to add more than 51 to get there, right? So like, there's a huge capital expenditure, a huge resource expense to get to a 51% attack. And then currently, like, the distributed nature of the Bitcoin network and the hash rate of the network, like, you can go look at all kinds of maps and charts to see this. It makes it very, very difficult for a single entity to do that. Even like a nation state entity would have to expend a significant amount of resources to conduct this kind of attack on the Bitcoin network, like this technical specific 51% attack.
Okay, yeah, that's really helpful. Thanks.
Yeah. Jeremy, all the blocks sequential? Yes. Like it's a timestamp, right? So like some Bitcoiners out there are like, their kids are born and they're like, hey, my kid was born at, block height 740,152, right? Because that was the block height, the height of the blockchain at the time of this happened. And it's kind of highlights another like intriguing part of the Bitcoin ecosystem, is it keeps track of time to a certain degree. Because you can't redo these past transactions or redo these past blocks, like the next block on average is 10 minutes, right? So like, it's like a snapshot in time of that whole ecosystem that you can then correlate to like the real world. And is this work on that block by miners who didn't complete it considered wasted time and energy? Is it considered wasted time and energy? Now we're getting into a philosophical discussion. I will just pose this to you. Waste is a very subjective thing, right? You might leave your TV on while you fall asleep because it's the only way you can fall asleep. That might not be wasteful to you. However, somebody that doesn't have that problem might think that you're wasting electricity, right? Or, people keep their house at like 66 degrees in the summer. I think that's a waste because I keep it at 74 and I'm perfectly happy, right? So it's like waste is all relative. And so I don't believe mining is a waste of time and energy because it is providing greater value than the expense. Another thing that mining has done as far as energy goes and waste of energy is, in the previous slide, I mentioned Exxon gas is like mining Bitcoin. Well, what they're actually doing is they're capturing flared gas at these mining sites or these drilling sites. So like you have this like drill that goes in to find like natural gas or oil or whatever, and you get something like you get a byproduct of that. It's called flare gas. And again, I might not have this exactly because I'm not an oil and gas guy, but the general thing is like there's this waste product on the mining site itself that is generally like burned or just released into the atmosphere, which is like, we can all agree, like that's not good, right? Like we don't want to do that. So what some of these companies have been doing is they buy this like hut, they call it like a hash hut or something. And it's like this metal container that has like a Chevy engine in it and then a bunch of Bitcoin miners. And that Chevy's engine sole purpose is to capture that flare gas and convert it into electricity, which then mines Bitcoin. And they're able to do that in these like remote locations, like in the middle of West Texas, nowhere, because the bandwidth required for the Bitcoin network is super, super low, right? So like the block size is super low. You can do this over SATCOM. You can do this over like long range, like Wi-Fi. So there's not a high bandwidth requirement for operating on the Bitcoin network. So these miners are able to go to these stranded energy sources in the middle of nowhere and monetize those energy sources. So you're getting like a cleaner environment because you're capturing these flared gases, and then you're also making money off of it, right? Like if you want a business to do something, you have to monetize it, right? Like it doesn't matter how nice the thing is. Like businesses are there to make money. Like when you get down to it, businesses have to make money. So if you can make money and keep the environment clean at the same time, like that's why a lot of these companies are doing it, because it's like a win-win, right? Like you get the good PR and you also get Bitcoin. Another thing that it does is like solar energy, renewable solar energy. You have like peak time, like in the middle of the day when it's really sunny, you're generating so much electricity that the energy grid might not be using. And so you might be something called like curtailed, or like, hey, just kind of like expend this energy. Like we don't need this on our grid right now. So like either put it in a battery or do something else with it. Well, with Bitcoin mining, because a Bitcoin miner is just a computer, you can turn it off and on in like less than a minute, right? Well, that means that at peak, solar production, if you have, extra megawatt of energy or something like that, you can now mine Bitcoin with it, which allows you to pay for more solar. It allows you to pay for improved infrastructure for your solar project or these renewable energies. There are Bitcoin miners using like wasted coal in Pennsylvania. Like this coal byproduct is like just sitting in Pennsylvania, like polluting the local environment. And this company's coming in, burning it all up into ash that can be used as fertilizer, and they're mining Bitcoin with it. And what it does is it allows this company to pursue this green energy mission, but also they make money while they're doing it, right? Because a lot of green energy companies, like it's very hard, like the ROI on renewable energies is so long term that it's hard to kind of like create a business around that. Well, now with Bitcoin mining, if you have excess energy anywhere, like you just turn it into money. But good question.
I have one more question. So just in that same vein there, like when you search for it, I don't really think it's a waste if you have multiple people searching for the same hash, because I think they're all going to start off with a different random starting point, a different random prior for their algorithm. And so the more people that are, searching for that hash at different random starting points, then the faster you're actually going to get to one of those, converging. It's not just a time sink of like, okay, I started at this point and then crunched and depend on your compute power. It's kind of like, well, randomly associated with, a random initialization. And so I think that you shouldn't look at it. I wouldn't look at it as a waste, regardless of the energy consumption for climate change or whatever. But as far as, a waste of compute power, because you are just searching this random space to begin with, and then converging from that.
Yeah. And again, the waste is relative, right? So a waste to one person may not be a waste to another. So, there are people out there that believe that the Bitcoin mining thing is a waste. But there's an interesting story where a guy, he's a huge environmentalist, like in the VC world on like environmental tech. And he set out to like basically look into Bitcoin and like how horrible it was for the environment. Now he's like a rabid Bitcoiner. Like he's all in. He's like, this is the best thing available to like fix our methane problem. And I don't recall his name off the top of my head, but yeah, he's out there. I can find the article and dig it up afterwards. If anybody's interested in reading it. But yeah, it's all about understanding.
If I could, not sorry to interrupt, I just kind of clarify more. I was more speaking generally, not necessarily like environmentally, or I was more, if you have all these mines and they're all simultaneously working to complete that next block.
Yeah, like
it is, and then one miner finds it, all that time and energy that the other ones were doing, is it like, is there some kind of contribution like that's all I'm trying to understand. So.
Yeah, well, I mean, that goes back to like the pool mining, right? So like if you don't have enough hash where you don't think you have a competitive edge to find a block, or maybe you can't afford to mine without having some sort of reward, you'd want to join a pool, right? And then you're getting some Bitcoin back, you're getting sats back, Satoshis back, for the electricity that you're expending to do that mining. But the margins of mining really comes down to the electricity cost. So like if you have if you have solar and you're mining purely on solar, I mean, your cost is just like, what does it cost you to maintain and buy those solar panels? After that's done, like your price per kilowatt hour, it might not be a waste to you anymore. Now, like in a house on like residential electric, like you're paying, 12 cents a kilowatt hour or something like that. Like the math is way different. And so these miners will sort of create something called a PPA, or power purchase agreement, where they agree to buy X amount of, megawatts from a power company. So it's kind of like guaranteed revenue for that power company. So that's a good thing, right? Like any guaranteed revenue in a business perspective, it's like a good thing. So these Bitcoin miners are like, yeah, we want to buy, 2 megawatts worth of power from you at, this specific rate. And usually they can negotiate because they're buying so much energy, they can negotiate like a cheaper rate than what you might get, at your meter in your house or at your business, because it's a consistent thing, right? My house fluctuates throughout the day. Maybe I leave for a week because I'm going on vacation and my house is using no energy, right? So the electricity company is not really getting paid. So yeah, I see what you're saying, and it kind of comes down to like analysis of how much mining hash you have to put forward and how long you're willing to wait for a return on that hash, right? Because I mean, you could have one little, they're called S9s or like the first gen, they're called ASICs or man, I can't remember ASIC stand for. I think it's like application specific integrated circuit or something. But like its sole purpose in life is to hash SHA-256. I like to refer to it as like a smart heater because it puts out heat. It's a computer, right? And it's doing a lot of computations. So you got to keep it cool. But yeah, the energy that you're putting in, like if you value the return that you're getting back more, then it's not a waste. And if it is a waste, you shut down the machines. And the beautiful thing about it is you can turn it off and on. You can program. There are companies out there that have programs that will programmatically spin up and spin down, Bitcoin miners based on whatever metric you want, right? Like, so maybe you have some sort of fluctuating power price and it doesn't make sense to run all your Bitcoin miners at once. So you kind of like spin them up and down, or maybe you're using solar. So like during the day, you have a lot of energy, like peak solar production. Maybe at night you're running off a battery. So like you shut down and you spin up on demand. 5 minutes left. Yes. Sorry. Let's move on.
Sorry. Thank you.
Yeah, no worries. So this is the properties of Bitcoin that I want to go over. The first thing is scarce, right? So there's 21 million ever. That is like built into the code. You can go learn the code and verify that code for yourself. So it is a scarce asset. If you own 1% of the 21 million, that will never change. Like you can go into a coma, wake up 10 years later, you still own 1%. As long as you own your keys, right? As long as you have custody of those keys and you've secured those properly. It's permissionless. Like we talked about the nodes, how easy it is to get into it. You can take an old junky laptop. If you have electricity, if you have software, you have internet, you're up and running with a node on Bitcoin. You don't have to ask for anybody's permission. There's no government entity or licensure that gives you permission to do this. You just spin it up and connect to other Bitcoin nodes and download the blockchain. Same thing with like transactions, right? Decentralized, we touched on this too. Like it's a global network. There's no like if Congress wanted to call Bitcoin before them, right? Like they do with like Facebook and all these other like tech companies or whatever. Like there's nobody in Bitcoin that they can do this to. Like the Bitcoin marketing team is me and a bunch of other Bitcoiners that want to talk to you all about Bitcoin, right? So there's no single point of like failure from a human perspective because it is so decentralized. Like there's people across the globe, Africa, Asia, Europe. I think there might even be some Bitcoin nodes running down in Antarctica. I wouldn't be surprised if there are, but like it's everywhere. People are using this all over the place. It's very, very decentralized. Compare this to crypto, right? So I keep these two things separate in my mind. You have Bitcoin, you have crypto. Crypto is all these like tokens and Web3 things and NFT stuff. A lot of those have companies. A lot of those have marketing teams behind them. A lot of those have people that are working on it that are expecting compensation for their work. In Bitcoin, it's largely just like community driven. Like even the core developers are on like a volunteer basis. There are companies out there now that are paying people to contribute to Bitcoin because they believe in Bitcoin and they want to see it successful. But a lot of times, like people are just doing it for fun. Like again, I'm not getting paid to tell you about this. I do it because I believe in Bitcoin and the mission and the problem that it solves. Borderless, again, we touched on this. Like I can send Bitcoin to Uganda and I don't have to go through Western Union or customs or anything like that. Like it just happens over the network. It's just like there's no borders, are just imaginary lines drawn by people, right? Well, like this breaks it down just like the internet. If the internet can reach there, you can get Bitcoin there. Easily divisible. We talked about this as well. So one Bitcoin is 100 million Satoshis, right? Pretty self-explanatory. You compare this like gold, right? Like if you have a gold bar, how do you divide that into, pay for your coffee or whatever? You can't. That's just one analogy a lot of people have. Censorship resistant. So we talked about the China ban in 2021. So anybody that's aware, China is one of the most like authoritarian, like hardcore, like crackdown by the government type of countries. And they banned Bitcoin. And you can go look up like the Bitcoin hash rate in China, and it's back up to like number 2 geographically. So like Bitcoin has escaped the Great Firewall. And so, there are several countries out there that have sort of like banned it or limited its use, but it finds a way because you need electricity, software, and internet. And those things are pretty readily available in today's modern world, no matter where you are. Programmable. This is like something we haven't really talked about, but you can like put logic into your Bitcoin transactions, or you can lock up your Bitcoin for years if you want. Like if you want to like really not spend it, you can actually put into a transaction like, hey, this can't be spent for 5 years. There's a lots of other things that go into this, but for the sake of time, we'll keep going over it. But as programmers, you're the sky's the limit. Like people are building layers on top of Bitcoin. There's this thing called a Lightning Network that are like faster microtransactions happening on top of Bitcoin, and that's all because it's all code, right? You can expand on it, you can build on top of it. Non-confiscatable. So if I'm walking down a dark alley and somebody comes up and says like, "Give me your Bitcoin," if I have that memorized, I can just be like, well, no. And they can either kill me, which in that case, they're a murderer and they don't have my Bitcoin, or maybe they negotiate like, hey, I'm going to shoot you in your leg if you don't give me half your Bitcoin. Well, maybe that incentivizes me to do that. Or I just like, am like, no, dude, like you can't have it. And there's nothing they can do about it. Same thing if you're trying to like escape, become a refugee out of a country. Like if you're crossing a border and you have your seed phrase in your head, instead of a suitcase full of cash, like somebody can take your suitcase full of cash as you're fleeing, right? Or it can be seized by whoever, bad actors, good actors, whatever. But if you're custodying Bitcoin the proper in an appropriate, secure manner, it can't be taken from you. This is a graphic. You can check out bitcoinforlocalbusiness.com if you want more. There's a whole pamphlet on it. But again, for the sake of time, we'll keep going on. If you're interested in the technicals, here's a list of the websites that I would recommend to you. Again, the Bitcoin core software is on GitHub. There's another thing called BIPs, or Bitcoin Improvement Protocols, or man, I can't remember what it stands for. Yeah, it's some sort of Bitcoin improvement, and I don't think P is protocol, but proposals. I think it's proposals. But it's ways that you can kind of crowdsource, like, hey, I want to do this, make this change to Bitcoin, and there's discussions and things that happen, and it's like a spec, like a protocol spec that develops for different aspects of Bitcoin. So like creating your wallets and keys, there's a BIP out there for the seed phrase, right? The 12 or 24 word seed phrase in the generation of that. I mentioned the Lightning Network, which is like a micropayments network built on top of Bitcoin. That's a whole nother technical discussion we could have. Lastly, there's this thing called Fediment, which it basically allows technical users to run Bitcoin on the behalf of a non-technical user, but at a more local level, right? So I like to refer to it as like second party custody. So first party custody is like, I own my own Bitcoin. Well, maybe I don't like technical stuff, but I trust my cousin Bob, and he's like really sharp on the technicals. And so Bob can run something called a Fediment for me, and maybe the rest of our family. And he's kind of like the technical arbiter, and you can have multiple guardians of the one Fediment. So like maybe cousin Bob and cousin Sally and, Uncle Tony are all super technical, and those three kind of run that for us. So it's a newer one, but it's out there. Are we good on going a little bit over on time, Cynthia? I don't want to like.
Yeah, that's fine. I just wanted to be respectful of people.
Okay. Yeah, I mean, if anybody has any questions, like I will keep going as long as people are still on the call. The next slide I have here is like, where do I keep my Bitcoin? There are sort of like 3 different solutions here that I've grouped them into. One is called a hot wallet, right? Hot meaning it's on the internet, and anything connected to the internet is not necessarily secure, right? If you are exposed to the internet, you're exposing yourself or your device, your data, to other people that may or may not be malicious. So a mobile phone wallet, right? There's a popular one that I like to recommend called Moon or Mun, M-U-U-N. It's like 2 buttons on the interface, send and receive. scan a QR code or, show a QR code to send and receive. But that's connected online, right? Like mobile device might not be the most secure way of keeping your Bitcoin. So I don't keep a lot of Bitcoin on there. I keep an appropriate amount. I think of it as like kind of like a checking account, right? Like my day-to-day spending. Running a node is also a hot wallet. Like your node has a wallet attached to it. Well, that's connected to the network and is connected to all these other people. So again, I don't keep my Bitcoin on my node. I keep it at my node is sort of like a central aggregation point, right? So if somebody wants to send me, I'll send it to my node. That way I verify all the transactions myself, or the code verifies the transactions for me. And then I can send it off to a cold wallet, which cold meaning it's not connected to the internet, or it only connects to the internet when you need to transact. I have Trezor around there. I need to update this because I have a new recommendation for cold wallets. It's called the Cold Card. A company out of Canada named CoinKite makes them. And I use mine completely air gapped, like it will never touch the internet, period. A lot of these hardware wallets or signing devices is another term for them, have like NFC capabilities. So you can use in combination with like your phone or computer, you can kind of like touch it and it can sign the transaction for you. I mentioned before, like an SD card. The third thing is custodial wallets, right? So like some third party holding it for you. I cross this out because like this sort of defeats the purpose of Bitcoin in my opinion, or at least defeats one of the main value adds that Bitcoin brings, is the ability to self-custody your value, your wealth, your funds without a trusted third party, right? A lot of banks are trustworthy, right? Like we all have our dollars in banks. But if you go to the bank, there's a lot of process between that, right? Like if I wanted to go withdraw $50,000 from my bank tomorrow, like I need to call them and they'll be like, oh, give us a few days, right? To make sure we have the cash on hand. And there's probably some sort of form or paperwork that I got to fill out to do that. Well, if you're custodying your own Bitcoin, you don't have that concern anymore. Like you can just transact if you have a node or somebody else has a node that's running for you. But these exchanges, it's an IOU for your Bitcoin. And so there's another phrase, not your keys, not your coin. And that goes back to that private key. If you're not holding that private key, if it's an exchange or a third party is holding that private key for you, they really, thanks for tuning in, Princeton. They really are the ones that own and control that Bitcoin. And you just hope that they have it available for you, right? And again, this comes down like a reputation and trust thing. So maybe you're not technically savvy. Maybe you're not deep enough in your journey understanding what's going on here that you don't feel comfortable doing it. Like I start out with all my Bitcoin on exchanges, right? Like I didn't instantly go to super secure custody because it's a learning process, right? But I do highly recommend that you self-custody your Bitcoin because it is a huge value add to it, right? And it removes a lot of like barriers to entry when it comes to transacting or censorship or just the hassle of it. Good job, Natalie. Sorry, I've got kids coming down the stairs, it looks like. It's all right. Where can you get Bitcoin? Hi. Good night, sweetie. It's fine. If they're saying good night, that's fine. Good night. I'll see you in the morning, okay? Bye. Apologies for the interruption. The next is like, where do you get Bitcoin, right? We talked about the mining reward, right? So if you really wanted to, you go buy a bunch of miners, you can mine it yourself. There are Bitcoin ATMs out there. I've never personally used one. I hear there's like high fees and like, it's just, I don't know, it feels weird to do it that way, but you can go do it if you want. I know people out there that have done Bitcoin ATMs. There are exchanges out there. I recommend now the Swan Bitcoin is my recommendation. I can send you a referral link if you want. And I go with Swan, even though there are many, many more like Gemini I used to use. Kraken is another one out there, but Swan is Bitcoin only. And again, that's kind of like my mental model of like, I don't do crypto, I only do Bitcoin. So I've kind of simplified my, ecosystem to just a Bitcoin only platform. Friends and family, right? So like, if you're my friend, if you want to come mow my lawn, I'll pay you in Bitcoin. Or if you want to, watch my kids, like I offer the babysitter, I'll pay her double in Bitcoin if she wants to accept it. And she was like, well, I don't know. And I was like, okay, well, let me know. So, it's a way to do it, right? If your friends and family have it, you can earn it from them or ask them for it. Employees, there are ways to set it up so you can get paid in Bitcoin. There are companies that have sprung up around this whole ecosystem and industry that are paying people in Bitcoin, which basically like is an instant conversion of your direct deposit.
But does that mean that the government can still tax your income?
Oh, 100%. Yeah, the
Yeah.
government, Uncle Sam's always gonna tax everything. So yeah, it's direct deposit, right? Like I have after tax dollars coming in. So some of these companies will take it and instantly convert whatever that, if you get like $2,000 in your paycheck, they'll convert that instantly to Bitcoin and send it off to you. There are also peer-to-peer like networks out there. So Bisq down there at the bottom, I think it's bisq.network is the website. That is a peer-to-peer sort of like exchange. I haven't used that myself either, so I can't tell you exactly how it works, but people list like, hey, I'm willing to sell X amount of Bitcoin, or hey, I want to buy Bitcoin for this price. And then Microlancer is like a, if you've ever been to like Fiverr.com where like people will do like tasks for you, like Microlancer is a way to earn Satoshis by doing kind of like tasks. Excuse me. How do you get the coins out of the computer? Good question, Andrew. The files are in the computer. Excuse me. I'll answer that in a moment. You don't, and again, this is kind of like a philosophical thing. You actually don't own Bitcoin when you own it. It is you own the keys that allow you to transact Bitcoin. And what I mean by that is there are these things called UTXOs, or unspent transaction outputs, which is basically like if you send me 1 Bitcoin, I now have a UTXO, a transaction that says I have 1 Bitcoin. Now that's on the ledger, that's on the blockchain. So like the whole world has that. They see that. Now what I do own is my private key, and my private key can now cryptographically prove that this transaction was sent to me. And it allows me to use that UTXO or that output in a new transaction to create new outputs, right? And that's how the whole thing kind of works. Is it's a very ephemeral concept, but dollars are like Cash App, Apple Pay, like dollars are ephemeral now too, for the most part. So you never truly own, quote unquote, your Bitcoin. You own the keys that allow you to prove you were sent a transaction, which you can then turn around and put into a new transaction to send to somebody else. And again, I apologize if that's confusing to anybody. It's a very kind of like philosophical way of thinking about things. But yeah, there are no physical Bitcoins out there. There's no like gold stamped with a $B type of Bitcoin out there. I hope that answered your questions, Andrew.
Yeah, I was actually totally just messing with you, but I still learned something from that. So thanks.
It's okay. So I've been studying Bitcoin since the end of last year. And the amount of like topics that it touches on is just like mind blowing. Like I don't know if I'll ever get bored. Maybe one day. But yeah, that kind of brings me to the end here. Here's a quote that I like to put on here from Satoshi Nakamoto on one of the forums. Is like, it might make sense just to get some in case it catches on. If enough people think that same way, it becomes a self-fulfilling prophecy. That harkens back to that network effect, right? Like it's only valuable if more people use it. Very similar to like Facebook. Like MySpace went away because people just stopped using MySpace, right? So it's a lot less valuable. Facebook became valuable because everybody's on Facebook, everybody's on Instagram, everybody's on TikTok, right? So it's this network effect that makes it valuable. And Bitcoin's the same way. So, just getting off of zero is what a lot of people refer to it as, is, whatever you feel like you can accumulate in a safe way for yourself. Again, this is not financial advice. Like, do your own research, make your own financial assessments. But, in my personal opinion, like I take what I am able to and convert it into Bitcoin, because I know that if I accumulate 1%, that 1% will never change. And if more people start to realize the benefit and the value behind this monetary network, then, the value of my Bitcoin goes up that I hold. I'll leave you guys with this list of resources. Bitcoin Twitter is like a huge thing. There's all kinds of Bitcoin people out on Twitter. For the veterans in the space, there's a Space Force officer. He's an MIT Defense Fellow that is writing a PhD thesis on Bitcoin and its applications in a national security framing. His name is Jason Lowry. wicked smart dude. Like, I highly recommend going to look up his work if you're a veteran and have worked in the national security space. There's all kinds of resources out there for learning. Bitcoiner.guide is a great stop. My first sort of like deep dive in the philosophical, like understanding it from a monetary perspective was the One is Money podcast. Specifically, Michael Saylor he did the first series on there where he talks about like the beginning of like man, where we channeled the energy of fire to become more efficient, and like just kind of, you can take that almost all the way into now we are channeling energy into this pristine monetary asset that is Bitcoin. And history shows us that the humans that have figured out how to channel energy more efficient than anyone else are the dominant humans, right? So like the guy that figured out he could drop a rock on a mastodon's head to kill it, like he's channeling the energy of gravity to accomplish a great feat, right? And that guy fed his whole tribe. So his tribe survived compared to the guy that didn't figure that out and his tribe starved out, right? Bitcoin Audible is another podcast where this guy named Guy Swan reads articles. So he'll take articles. So if you're not a big like article reader, Bitcoin Audible is a way to ingest that same material in a podcast format. If you want to run your own Bitcoin node, there are several companies out there that sell them like prepackaged. My personal recommendation is Start9, because not only is it a Bitcoin node, it is a sort of like host your own cloud type of node where you can do like files and photos and, you know, password vault type of thing. And it's all in one kind of package deal. So yeah, that concludes Bitcoin 101 for Operation Code. And I just want to thank you all for joining me here tonight. I want to thank Cynthia for setting this up. And I hope this, if nothing else, I hope this is at least like tickled some sort of curiosity within you to go learn some more, because sitting through one, you know, hour and 15-minute workshop is definitely not enough to understand this. I don't fully understand the ramifications and, you know, even the technical specifications of Bitcoin to a complete degree. So I would encourage you all to go learn more. And if you have any questions, I'm happy to answer as many as I can. So yeah, thank you.
This was super insightful. I've learned a ton. I hope everybody here, I could tell everybody has learned a lot just by the questions and how long everybody stayed on the workshop. I'm recording this, so what I'll do is I'll get it all prepped and kind of edited and put it up on our YouTube channel. So anybody who wants to share it out, or you missed something, you want to go watch something again. Am I allowed to share the slides, Gary, as well?
Yeah, I can provide you the link to the slides. Yeah.
Okay.
I
And
think
then
the link I
I'll
provided you is a commenter's link for Google Slides. So like share it out. Like people start spamming it, I'll lock it down more.
Okay, sounds good. I'll share that on our Slack channel. For those of you who aren't part of Operation Code, feel free to join us. I'm going to put the link in the chat. As always, really great to have you, Gary, and I'm looking forward to maybe having an even more technically advanced, like getting into like mining and how can you actually program Bitcoin for another future workshop. I think that would be super appealing.
Sure. Yeah.
But
yeah.
thanks all for attending.
There's a programming Bitcoin book that I've been meaning to work through. So this might be the motivation I need to get on it so I can do another one. And if you want to see a miner, I'll go grab one. Do you want to see what it looks like?
Yeah, that'd be awesome.
Okay. All right, hold on.
We're geeking out here.
Yeah, I really want to ask him about the just kind of the mindset of people thinking that Bitcoin, like the value of Bitcoin being like a US dollar, like and breaking away their mind from that, like Bitcoin is its own currency, like the value doesn't have to be associated with the US dollar or whatever, you know, large fiat currency there is.
Mm-hmm.
Let me turn off the blurred background. Don't mind my the messy back of my office here.
Your man cave.
This is an S9 Bitcoin miner. So this is like OG, like first gen. It's not very powerful. It consumes a lot of electricity for the hash you get, but it was really cheap to get my hands on.
Is
this
it
one's
loud?
I need to. What's that?
Is it loud?
Yes, but there are ways to mitigate that. You can kind of turn it down, so it's not as much hash, but it's like way quieter because it doesn't get as hot. And then yeah, there are solutions out there. But yeah, this is it.
How much did you pay for it?
$275.